Hey, this is Maj again, coming to you with another video again. I'm probably really annoying you at this point in time. I've done 3 videos in the last few days, but I'm here. I'm here with Jay Svenda.
Yes, Svenda, it's
Yeah,
in the
Svenda.
Czech surname, but yeah, but you can make it easier, just Svenda.
Okay, and just to let you know, Jay, I connected you with Michael Wazowski, who is
Hmm.
recently joined our team as an analyst, and I interviewed him a few days ago, and I'll send you that link too, so you can. I
Okay,
know you're gonna talk to him in a few days, and maybe you guys can. I think you guys work really good together, actually. So
cool.
I met Jan, well, virtually. I think maybe through Twitter, maybe a conversation or Geo support a couple of years ago, and I think at that time you were investing in nano cap and microcap companies. But I think you actually reached out to us because had some interest in maybe short selling at the time. I think you saw maybe what we did in the China Hustle, and but it was awesome that you were looking at OTC companies, trying to find like tier 1 quality companies there because we do a lot of that ourselves. That was pretty awesome, and I think then you went to do your own thing. So I think that, and then we reconnected recently here. It was funny because I was actually in a chat room, a short selling chat room that I was invited to, and I saw your name pop up. Like, wait, I know this guy. And so I'm in a short selling chat room. So I figured I'd reach out to you, and here we are now. So why don't you give a little bit about your background?
Hmm.
As long as you want, doesn't matter. There's no time restriction here, and maybe your evolution of an investor, from long to short, and kind of what you're doing, and then we could talk about what we're gonna do together here at GeoInvesting.
Sure, sure. I mean, like, long story short, I studied in the UK, economics and finance, and then basically I had a internship at Morgan Stanley, which kind of showcased how the sell side works, and I was not amused or inspired to maintain that kind of career. So basically, I quickly understood I want to be a bit more independent and want to focus on something let's say smaller, and of course also something where I can kind of do my own thing a lot more. So I then worked for an equity research firm in London called StockViews, and I've been working for them for like a year and something. And that's where I kind of like really learned how to do proper equity research. I used to write for Seeking Alpha from 2014. My first article was on uranium, which went horribly, but I learned quite a bit, and so I kind of like from 2014 I wrote for Seeking Alpha, but then I started working for StockViews in 2016, and that's where I kind of really actually learn how to do it let's say professionally, especially the fundamental due diligence, because they were value investors, but they were kind of looking at large caps, which was not certainly something that I was too comfortable with, just because I didn't really understand how to necessarily forecast the earnings of a large company, whatever have you. Where's the edge? I mean, that was my question basically, like, what am I adding to the research? So even though it was a great experience on the equity research side, I kind of understood this is not something that I would like to do in the long run. And that's where I kind of started to learn about OTC stuff and nanocaps. I did listed microcaps, before, but really the OTC stuff started in about 2016, where I then kind of wrote a bunch of articles on Seeking Alpha, but then decided to have my own newsletter because I kind of understood the community and saw the opportunity to do something there similar to GeoInvesting, although my kind of aspect was to create a database of all the OTC companies, because there are so many, right? So I created a database maybe with like 400, 500 companies, which I call, reasonable companies, because of course a lot of the OTC stuff is just junk. So basically I focused on creating a database. Along the way, of course, I found, many great long ideas. I think I remember you guys did like an article on one company that was doing something with military. It was radios or something like that. I don't remember what was the name, but
MKRS microsystems.
Yes, exactly. Micros. Yes,
Yeah,
exactly
micros.
right. Exactly right.
Yeah.
Yeah. And so that's where when I go, like, I think we connected over that, to be honest.
Okay.
And so I did the similar thing. After the newsletter, I started working for a fund manager in the US who was dealing with OTC stuff, and I was mostly specifically focused on legal situations. So a lot of dark companies, basically almost exclusively dark companies, and kind of trying to navigate the legal situation there when they don't really want to show you the financials and all this kind of funny stuff. So basically, we had to deal with that for a year, but on the back of my mind, I always was interested in short selling because I felt that that's really something that interests me the most. It is the hardest thing to do, but if you can make it, I mean, that's just the best equity research, I believe.
Mm-hmm.
So that's probably what was in the back of my mind all the time. And in 2019, I kind of decided, I went through the OTC world, backwards and forwards a couple of times. And of course, I could probably focus on it even more. But I felt like short selling is, especially at that time, the markets were still high, and it seemed like an interesting focus to explore a bit more professionally, and try to really again delve deep into it, and try to figure something out, and bring some value. So that's kind of like the transition from obscurity to kind of short selling in that sense.
Well, that's what's cool about that is, when you're looking at OTC companies as well as short selling, you're playing in areas that are harder for a lot of people to play in. So there's an advantage you can get from, getting some knowledge and expertise on the research there. So they both have that kind of similarity to it. People don't look at OTC companies, they ignore them, so that creates opportunity. And the short selling is, there's definitely a talent and skill to it. And that makes it difficult for a lot of people to get involved in it. So you can gain an advantage as an investor by trying to perfect those two things. I think that's awesome. You got both things going. Pretty cool. It's kind of like Geo. Geo does OTC, my caps, and we do short selling. So we try and do that thing. But I'm curious of a question though. I mean, so you were building a database, right? Do you have any stats in terms of how many OTC companies are out there that you're looking at, and how many of them actually were at least a quality that you were willing to look at? Did you ever make that number out? Get that number?
Yeah, sure. So if you look at the OTCmarkets.com, which was my homepage for a couple of years, basically there is about 14,000 stocks on there, but a lot of them are double listings, right? So Canada, and so on and so forth, all these weird Russian companies, oil companies there, and so on and so forth. But if you want really US companies, it's about 7,000. And from that 7,000, I kind of selected to roughly 400, 500 companies that are worth looking at. And there are some maybe that I have not included, but these have been really in the penny areas, but penny areas of the penny stock market, just really cents or whatever. Or not even a cent, where maybe something's going on, but it's hard to kind of see. So I think roughly that, 400 out of 7,000. That sounds to me about right.
Which is still a good hunting ground. I mean, for sure. I mean, for most people, that will be fertile, for sure.
Yeah.
Do you still hunt there at all? Are you not even doing that recently anymore? Personally?
Well, I haven't been actively focusing on it. I still have my favorites. I really love Mills Music Trust. It's it's really the best dividend player that I saw, and I was able to position myself well there. So I still follow some of the companies, but I haven't updated my database for quite some time. A lot of the darks, are interesting. I think especially now, maybe, and the trading in OTC is crazy, right? I mean, I used to have so many orders, out there. Don't have that anymore, really. That I was just trying to execute, and so on and so forth. And you could sell, insane stuff sometimes just because of some random luck or some random order getting executed. So, yeah, there's equal part trading, equal part research. I guess when it comes to this, although the trading is not necessarily active, but you never know what gets executed. So right now I'm not actively looking at it anymore. But I do have some like favorites that I wrote about on Seeking Alpha publicly and so on and so forth. And
Right.
like Gainsco is another example, which is a good one.
Which one was that one?
A Gainscope. It's a GANS.
Oh yeah, the insurance
Yep.
company, the insurance kind of focus.
Yeah. But right now I'm not super like it's still trading like it was $29 today when I checked it. But I'm not super sure what the impact will be on them. It might be quite bad. Let's see. I don't know. It's still
What kind of insurance lines they have? Is it on property and casualty, or is it across healthcare? Is it what is it?
a car insurance. It's car insurance.
Okay.
Yeah. It's car insurance, and so I'm not really sure how the current situation is going to work out. Especially, I feel that they might have a lot of growth coming, not necessarily from the subprime, but basically just cheap car financing. So who knows what the impact will be there, but it might be interesting to track because their cash flow has been amazing. Like they paid out special dividends and so on and so forth. Their cash flow was super strong and the founder seems to be good. It was a favorite of Thomas Brazil, is this fund manager who, I mean, now does like credit stuff, but we talked about it and that was I felt pretty good. So, seems like an interesting stock.
And the music trust company what was the name of that company, and what's the symbol on that one?
MMTRS. It's Mills Music Trust. I mean, this is just they have just portfolio of 50,000 songs that basically gets played and you get paid for it. And this is one of the companies where it's like whatever the crisis is, people will play music. And nowadays, actually, there is also the law to, or let's say the regulatory environment regarding copyright is getting much better. And so actually the royalties could be actually heading higher because of course back in the like 10 years ago or whatever, the pirate system worked very well, right? And so you had quite a few of royalties going dark. But nowadays with all the streaming services especially increasing the royalties for the subscribers, then it could still be very interesting.
Okay.
So these are just two examples.
One last question on the long side of the game. So when you were vetting out your OTC company, how important was capital structure in your vetting process? What were some of the criteria that you were looking at that you thought were? There's no cookie cutter approach. Everything's different, right? There could be really bad looking companies that look good eventually. But did you have any kind of top 2 or 3 kind of criteria that it had to meet in order to be in that quality kind of spectrum?
I was always, and I'm still very much, let's say, interested in asset-based evaluations, right? So if I can understand the asset very well, then, I don't necessarily care too much about the cash flow. That was my natural approach to things. But in the OTC space, that kind of I kind of blurred because in the end, when you see a company that's trading at 3 times cash flow, okay, even though I'm not super comfortable with not having much assets to back up the cash flow with, I'm gonna buy it because why not? So I guess the situation really depends, especially in the OTC. I felt like there is almost no kind of like spectrum where I would say, okay, I don't want this, or this is too, there are of course times when it's like, okay, is it too risky or not? But you had these like candied fruit companies, Paradise Fruit, which was basically trading for the factory price. It's like there are these kind of things like you don't really have to have a certain technique to understand the situation. So I don't necessarily had a style there because also I did not really focus on the growing companies that much. I know that GeoInvesting, and for example, I know that what's it called, the microcap club, right? This is quite big with some of the guys. I was not necessarily focused on it too much because I was looking for informational advantage, and you guys of course do that as well, and you understand it very well. So I was looking at it in my own kind of way where it's like, okay, if it's abandoned, if not many people know about it, that's where I want to be, because I will understand just the amount of information that you need to unearth to actually get that advantage is pretty low. Even though I'm based in Europe, I could really unearth a lot of information that was quite easily accessible by just calling up people or whatever, reaching out. So that's where I kind of like understood what the situation is going to be about. And I guess it was a lot of times it was about informational advantage for me.
And how important
Maybe
was
that was one thing then.
outstanding? I mean, I mean, just a cursory kind of glance, you know, just if you can remember, when you were looking at this list of 400 or so companies you had in there, did you notice that most of these companies had low outstanding share counts, or did you even care about this outstanding share count?
Of course, it impacts the price, right? I mean, usually that's how it works. I mean, of course, the dark companies, they usually, of course, have low shares. I mean, Music Trust, that's like 200,000 shares or something like that.
Right.
Which, of course, two reasons: important trading, right? I mean, how that impacts your trading, whether you can position yourself well, and of course, how much you want to input, upfront. So I would say that actually most of them would have a low share count, as you said, yeah. And for me, that would be, that would be probably the most the highest number of companies that I would invest in, because the ones with the higher share count, of course, that means that they diluted somehow before, or like it's basically like almost two kind of companies there, like perennial losers, or like companies that are just forgotten and are buying out the shares, right? So either they're diluting the shareholders until they find something, for example, or basically they just despise the fact they're public and they just want to be private as soon as possible. So they try to buy out. So with the share count, I mean, I would say it quite varies.
I know, because I know,
but I think
our experience is like, at least in the U.S., that is. I mean, we find that, lower, when we start getting these 50 million to 100 million outstanding share counts, for some reason they don't work out so hot. And usually the way I look at it is, hey, this may be going to the short side now a little bit, is it kind of shows you, if that management team has been there a long time, it kind of shows maybe their inability to grow the company because they continue to raise money and they're not doing
exactly right.
So obviously you need to look at revenue compared to outstanding shares, but there seems to be a lot of pump and dumps that kind of play in that kind of area when you start getting a lot of shares out there. And I
mean, but I think it's a great point. Like, as I said, either they are just continuously diluting or they're just buying up their shares. But there were these kinds of companies where, of course, like, you had pretty high share outstanding, but still they kind of tried to do something, and then finally, suddenly, they did something. Yeah, but for sure. I would say that I share the same experience regarding the share count. Yeah,
I know it's a lot of times. For example, when I would look at these high share counts, and if I saw a new management team come in and do a reverse split, now you have a clean slate. So I would look at those. I've had success with those kind of companies where it's new management, is inheriting a bad capital structure. They come in and try to fix it. So that's going to work. So let's go to the short side again. So, I mean, Yao, you enjoy short selling more than you do going long? I mean, you have a preference? You've been OTC long and short selling. Do you like it better on the short side?
I mean, it's more interesting. It's more fun on the short side, like OTC, because basically once you find Mills Music Trust, you just buy it and that's it, right? I mean, like you can just continuously hold it or whatever, or you can find other companies and stuff. But for me, really, the most interesting part is where I can learn some new stuff, right? And basically the due diligence on the OTC companies that gets repetitive after a while, and you can learn about new industries,
right.
And you can learn about this. And you can really be an expert in business sector, but I'm not necessarily super interested in that. I'm more interested in learning about finance and how the company actually works. And so accounting, of course, was something that I'm very interested in, or generally corporate governance. And when it comes to fraud, I mean, that's really the best research there can be. I mean, that's just the best fun. So for me, it was driven, I mean, the interest was driven by the fact that I can learn more about how the companies actually work. And I enjoy being pessimistic. So that's
well, right now there's a lot of pessimism going on now. So
yeah, for sure. But like
seeing some of these big cap, a lot of these big cap stocks that come down, a lot of them are still overvalued. If you look at some of their valuations, I mean, they got so stretched in this bull market. I was looking at some of them because maybe I wanted to put some big caps in my portfolio. Like, and they're still trading crazy multiples still. And it's amazing how overvalued a lot of them got. You know, and
Yeah.
so I mean, so when you're looking at short selling, maybe I know when we were talking before, you had some extra, maybe you were talking about your you had an expertise maybe or a passion for looking at the legal side of it. I think you said looking at maybe you can get into that a little bit.
Yeah.
That's something that I think you can really help us with a lot.
Yeah, I mean, certainly through the OTC experience with the fund manager, I kind of understood, more and more about the legal side of things. And so basically, I think that that is probably, where I could provide the most value in terms of, just understanding lawsuits, understanding what the situation is, knowing how to obviously go around Pacer, because, for example, I know that you've mentioned Purple, right? So I looked into it, and of course, the lawsuit is not in Pacer and these kind of things, because of course you have to go to the district court. So just knowing where to go and what to do is quite easy for me, and quite something that I've done in the past. So I think mapping out the situation, understanding the liability for the company, that's something I'm fairly good at. And again, it's just about, law. You have to be, of course, a lawyer to understand all the context, but when it comes to a specific situation, you can kind of learn quite a bit about that specific situation. So that's where I believe,
So you've written some short pieces, I guess, right? I think it does something speaking out, but can you maybe take us through one of your better ones, and maybe one of your ones that didn't work out and what you maybe learned from it, or is this?
Sure. Yeah, sure. From the legal side, I didn't really do. I actually had a payday lender article on, which was binary short, and I learned quite a bit on that, because it didn't work out. So when binary short thesis is no good. But the ones that I would highlight probably two are, first, the one that worked out was what's the name of the company? Vuzix. We talked about it as well. VUZI.
Okay.
Vuzix. Yeah, exactly right. So this was obviously, a small cap, perennial loser, no patent portfolio. There I did an overview of the patent portfolio as well for the article. And I don't know how I found it. I think back in the days when I wrote my first short articles, I think I looked at short interest, and I looked at mediocre short interest, where I thought, okay, there's got to be a thesis out there, so I just need to understand it and see what works, right? And with Vuzi, that worked pretty well, because you could understand the picture quite clearly, and you could find all these really obscure details that didn't really work with what the management was saying. So this was a combination of bad corporate governance and just plain bad business model or business idea. So that was Vuzi. That worked out. Yeah, it just didn't make sense. The product didn't make sense, but also the management was kind of lying, or not lying, but obfuscating.
What was the stock price when you wrote it?
I think it was 5 or 6, something like that. Let me see. And yeah, now I'm not even sure. I didn't check where they are now, but they were below $2. Oh, it's $1.17.
Okay.
So yeah, it's that worked really well.
And that stock was falling well before the coronavirus, I think, too. Anyway, so.
Yes. No. Now the impact on the market it was down way back. I think even 2017, or whenever I wrote the article, it went down quite quickly after that. Yeah, 2017. So yeah.
So I think you also talk about you do some screens. I'm sure there's a long list of stuff you do, and we don't want to give it all away, but give me an example maybe of take it to a process of a screen you might run to find some short candidates. I think you just said short selling interest might be an interesting thing.
Short selling interest, I think that would be nowadays. I don't think that's very simplistic. That's a very simplistic thing, and I don't think that's too interesting. I think I've just become much more interested in depth debt fueled shorts, because I like sometimes the catalyst, and with Ring Central, I also looked at, of course, Ring Central. I have few questions on the thesis as a whole, because a lot of times the debt can be just great catalyst, and in the current environment where regulatory bodies don't give a shit about what's happening in the market,
Right.
you don't have that you can kind of showcase, and you can submit your SEC report as everyone else does, but still the activity is pretty low, and so that was one thing that I would look at. There, of course, you have quite a variety of screens that you could run. Maybe the most interesting one from the debt side, what would it be? I mean, just the kind of I guess increase in that would probably, I mean, again, the quite simple fundamental screens, but it could kind of show you things that are increasing in that, and have low cash flow, whatever, compared.
You look at trends like, for example, I know where you might have account receivables growing faster than sales. I mean, you look at these trends too.
I mean, yeah, of course, the Bennish model still works, right? To an extent, you can deconstruct the Bennish model and basically put the screens, each factor of the screen as a standalone screener, which still works well. Even Bennish model itself still works pretty well in terms of showcasing some weird accounting, because it basically happens when you get a screen like that, and you get a company that should be kind of like a short in terms of the Bennish model, then you usually find some weird accounting with it. Yeah.
Okay.
Certainly. Yeah.
Great. And how important are the risk factors as part of your diligence? Is that one of the first things you do, or you do it later? I mean, you find a more boilerplate.
You mean the SEC?
Yes.
You mean, yeah. Well, yeah, I mean, for sure, whenever I found something interesting, I definitely do the comparison. So I track the changes, all right, and the document. The risk factors themselves, regarding keywords, I don't have a specific keyword search right now, because we talked about it, that I have some ideas, but don't really have it, we don't have it set up regarding keywords, just basically, doing a screener for keywords, and then seeing what pops up. But there's a lot of things that you could do there as well. Just an example, I am a big fan of accreditable yield, which is this accounting term, which was used by this mortgage rate that I used to research back in the day, and basically you could search for that, and every company that uses this accounting term, is suspect, because basically it allows you to just book gains without actually gaining the cash. So the classic pumping of the income statement while the cash flow looks complete shit. So, but the manager will try to persuade you that it looks good. So regarding risk factors, I don't have like a specific case, but keywords for sure. Yeah,
it's very case by case and different. And I know looking at changes is an awesome way of doing it. I know one of our, sometimes you come across risk factors, you can't believe you see them. There was one that we did when we were doing a lot of reports on Chinese stocks. It was a chicken farmer. The symbol was YUII, UA International. And they had kind of have chicken farms. And they were at one point a legitimate company in China. And we found this risk factor. And we were writing the article, we were almost done, and the last second I was going to, let me go through this again. Oh my God, what the heck, this can't be. I found a statement basically saying that they commingle funds. Basically that the CEO or employees of the company will basically put money of the company in their own bank account. And I was like, I couldn't, how is that even possible? And it was actually a longer explanation of it even getting worse and worse. And how the auditor even signed off on this? And it turned out in this case that the company raised the money at maybe $15 million, I can't remember. And they said they used to acquire a company, another chicken farm in China. And what it turned out to be the case was, that never happened. He took that money and put it in the bank account. And they actually admitted it on a conference call in Mandarin. We were on it, and then they halted the stock. When the CFO said, "You can't say that," or whatever, you shouldn't say that in Mandarin. We had a guy on the phone. But what was funny about it is the way we actually eventually first discovered that fraud was we actually sent somebody to China. Maybe this one of our investigators. Hey, this might be an interesting company. We want to go long. We were long it for a little bit of time. So the taxi cab, apparently that the taxi cab driver knew the person who the Yui claimed he buying the company from, buying the farm. He said, no, that's not happening at all. so we went, all right, different way. We're going to go to that company now. We're going to go to the one that's being acquired. And we found out he's like, no, he said that company's going back. Yui's going bankrupt. He called me up and said, let's play this game. Let's pretend, please, to say yes. We'll split the money, all this stuff. We had it all on recording. It was ridiculous. So for me, that was insane. And so it's you won't find that often. These risk factors are usually boilerplate, right? But if you're willing to put the time in, you might find one that's interesting. You got to go with it.
Yeah, for sure. I mean, that's really just like the single keywords can work or whatever when something pops up. Something's wrong. Auditors, another thing, screening is pretty useful for, or at least trying to get the understanding of the clients and the auditors and so on and so forth. That's another one that works well.
So I think what I'd love to work with you here. I think that we talked about being here for maybe a month. We're going to see how this works out and maybe make a longer commitment. I know you can add value, especially work with Mike. Mike is very motivated to get involved in the short selling too side of things.
Cool.
And you're going to be impressed with what I send you that he did so far. I think you like it a lot.
Okay.
So with Geo, we're trying to really offer our members a portfolio protection thing. We're going to bring due diligence very early to members in the process. And because it takes a long time to write a report, and it would really be bad if we had a report in our hand, right? And that some members were buying it, we didn't know, and then we could have told them, hey, a month before that, hey, this is what we see in this thing, be careful, kind of thing. So that's gonna be pretty interesting. There's a stock I want you to look at. I mean, it's only 70 cents. SOLI. Keep on our back burner if it pumps. It's already pumped a little bit. It's playing the whole telehealth kind of play.
Okay.
Reverse merger, I think. And they said I was reading a press release that they have 20 million customers, right? They've had 20 million customers over like the last 3 years. And the press release, I went to their filing. The company has like maybe less than 100,000 in revenue. So how do you have 20 million customers? So, all right, that's interesting. So if this thing pumps, we'll let's not spend too much time on it. But if this thing pumps, we'll take a look at it. And, it might be worth taking a look at now. This thing's probably worth zero anyway. Yeah. And it might be worth you and Mike talking about. So, but
okay, that's really cool. Cool.
Yeah. So I really, hopefully you and Mike maybe if this really synergy goes well together, we can really create a platform around this whole real-time due diligence coming to our members on a real-time basis, not as reports not all the time, but maybe as, hey, briefs that might culminate into a report. I think that's the best way. And so I basically said to myself, look, I did shorting for a long time. I did it for like that 2010 to 14 when we were doing China. Yeah. But the game has changed a little bit. And to build a membership platform based on shorting is very difficult because not everybody can do it. There's only so much amount of short that's available. There's a lot of risk involved in it that I don't like necessarily. So we're possibly talking about pivoting to, hey, let's at least provide this kind of red flag analysis to members and make that useful. Mm-hmm. And it might culminate into a report that we go short, right? But we're going to keep it tight within Geo, so within premium. So we're not going to go out there, necessarily always touting these things. We make it very exclusive. Sure. And I think that could be very valuable, and I would like to see how that works.
Is that inspired? Like, I don't know if if you saw what Utopia Capital Research does. It's this like smaller website, but they basically do this within OTC. So they kind of like have reports about companies that have certain red flags, and they basically write reports about it. Not necessarily short, but basically like, hey, maybe not the best thing to go along.
Is he in our room too? The shared room or not? Chat room?
Yes.
Yeah. I chatted with him. Yes. Yeah. He's a
okay. Yeah.
Great. He's got a good list of companies there. He's a man.
Yeah.
It's amazing how many there are out there, right? Yeah.
Yeah, for sure.
Yeah. So I'm excited about this, man.
Cool. Yeah, that sounds great. And I mean, like, I'll be more than happy to help out. And certainly I would be also more than happy to share the screeners and come up with some ideas and so on and so forth that we could work on.
Okay, and anything you need from us, let us know. We have some research tools here you could probably use to help you with your screens and help you maybe with some of that keyword analysis maybe you weren't doing so far. And one thing I want to end on this that was really cool. A big part of what you do is you analyze other reports that are already out there, short pieces.
Yes.
And try and either find, hey, poke holes in it potentially, or hey, this is really good and there's no reaction. So that can be really good value. If you could find companies, for example, hey, that was a poorly done piece, we can talk about that, right? There's an opportunity there that they missed. Maybe if it goes down, we can go buy it. On the other side, possibly if you find stocks that were well written by maybe a less known source, that where there was no reaction, maybe we can add value to that report.
Yeah, for sure. I mean, for sure. That's what I do on a weekly basis. So basically, I look at every new campaign, and that's been really cool. Not only for my own profits, because some of them have not been known. Like if some bigger short Muddy Waters comes out, okay, it becomes quite tough to short it earlier. So, but there were others that were like super interesting, like New Tech Business Services. NEWT, that was written by Copperfield Research, and again, like they're relatively well known, but they are not really well distributed, and so not many people knew. And the options, I mean, you could buy some cheap options, a couple of days after the report, and of course it got hammered, with the slide, because the report came out like in February or something like that. So of course it went down by the situation. But still, you couldn't really see any sort of change after they released it. So that was just the one idea that popped into my mind right now as we talk about it. But yeah, certainly, I am looking over every new campaign.
No, we could certainly add value to that to our members. And you can say, hey, wait, this was a great report, no reaction. Let's
yep.
So.
Yeah. Most certainly. That would be great. Yeah.
And I think it maybe even be able to help us for a long research. So if I'm looking at a company that's long and maybe I missed something, you'll be able to say, hey, here's a red flag you should take a look at and be careful with, or ask the company about it. So that I see that really valuable. This is not just about shorting, it's about protecting portfolios, understanding the long side and what the risks are, right? And helping build that caveat kind of the stream. So I'm really excited about this, man. I was just thinking about you not too long ago, because I was going through our premium Twitter and I saw your name there. And it's funny you ended up in that chat room.
Yeah. No, so that's certainly great, and I'm more than happy to look over some long stuff as well. I haven't done it for a couple of months, but certainly, I can always ask questions, right? I mean, our job is to ask questions, so I guess I need to get better at any point. So more than happy to
maybe some of our long ideas will be short ideas. Who knows?
Well, but that's the thing, I mean, like currently I'm just like, okay, I'm gonna go along the market. I don't really care about specific stocks, but I think that as I'm going to be more and more active, within short selling, of course you will find companies that are actually misplaced and the valuation doesn't make sense, and you should go long, because you will do all the in-depth research and then it will just make sense. And so, cool. Fair enough. It's not a short.
So, well, thanks, Jan. I mean, it was awesome taking time. I know what time is it for you right now? It's a little late. So.
10:30. But, I'm usually free until now, so it's completely fine.
Great. So, I mean, just let me know how your conversation with Michael goes. We'll have more of these conversations. I think what we'll do is, if we're finding companies, we'll talk about it like this, have conversations, move from there.
Okay.
Thanks, man.
Yeah, sure.
Have a good night.
That sounds great.
All right, see you.
You too. Bye-bye.
Bye.